Price action. Probably one of the most important aspects of trading with technical analysis. It can predict whether the price will jump or fall, gain momentum or lose momentum. If you don't understand price action, chances are you want to be a successful trader. Let me tell you why. Most indicators, even the popular ones like moving averages, MACD, RSI, stochastic, all are lagging indicators. What I mean by that is that they use the previous price as an input. So sure, it might give you a signal to go in, but most of the time, the chart has already started going up or down before the indicator gives us the entry signal. This is the exact reason why price action is such a powerful tool to understand, because it can help you make decisions in real time. No delay, no lag, pure in the moment trading. Now, I'm definitely not saying to never use indicators. Indicators can 100% help you make unbiased decisions when trading, especially when paired with price action. But what I am saying is if you want to become a successful trader, you definitely need to understand price action. That way, you can take trades that you are confident in. That is exactly what I am going to show you in this video. Let us get straight to it. First up, let's talk spot trading timeframes. We've got monthly, weekly, daily, and the sneaky little 4-hour daily. Sounds like a weird dating app schedule, right? But here's the deal. We scope out the big market trend on the higher time frame. Think of it as the big boss level. And then hunt for the perfect entry spot on the lower time frame, like sneaking into the VIP lounge. Now, let's break down trends into 3 epic categories. We've got the upward trend, the superhero soaring to the sky. Then there's the downward trend, the tragic villain plummeting to doom. And finally, the accumulation range. Basically the market just chilling, sipping coffee, and deciding what to do next. Who's gonna win this epic battle? Stick around. So, what's an upward trend? It's when the price says, "I'm going up, baby," and just keeps climbing. How do we know it's happening? Check this. When the price makes a higher high, aka HH, the new ceiling, and a higher low, that's HL, the new floor. We've got ourselves an upward trend. It's like the market's doing a victory dance. But wait, there's a dark side. When the market makes a lower high, LH, the sad ceiling, and a lower low, LL, the depressing floor, it's officially a downward trend. Think of it as the market tripping down a never-ending staircase. Ouch, that's gotta hurt. So here's your mission, Trader Warriors. Head to the weekly time frame. Identify that trend like a detective on a hot case. Is it soaring with higher highs and lows, or crashing with lower highs and lows? Once you've got the trend, you're ready to strike with those perfect entry positions. You've got this. First, we went and recognized the trend, which was bullish, like spotting a rainbow in a market of thunderstorms. Green arrows up, baby. Now we need to go to the lower time frame, which is the ROSEN. Look for the entry point. We have a trend line here, a magical line that price can't ignore, like your ex seeing your new glow up. A trend line is the line that the price reacts to and then hits it up or down. It's basically the market's favorite wall to bounce off of, like Wile E. Coyote, Iris, which is typical in the daily time frame, because even trends have schedules. Mark your calendars for the next big move. We have a trend line here with 3 hits. 3 times the charm, 3 times the hope, 3 times the anxiety before the 4th bounce fails. Now look for the next strategy where we have a support point. Support, the emotional friend of price who says, "Hey, don't fall any further, bro," which then hits a candle with a high shadow. The candlestick equivalent of someone trying to flex at the gym and falling over. So we have a reinforcement strategy called Fibonacci. Fibonacci, the wizard behind the curtain, whispering golden ratios into Price's ear. Look for Fibonacci retracement in the tools section. Finding it is like finding a Wi-Fi hotspot in the middle of the desert. Pure salvation. Go into the settings and turn on only the 0.038, 0.5, 0.61, 1 areas, and turn off the rest. Minimalist Fibonacci. Marie Kondo would be proud. If it doesn't spark joy, delete it. Below the Fibonacci settings, the reverse section and inside the level section should be on percents. Because sometimes going backward is how you find forward, just like love languages. The area from 38% to 61% is our golden zone. Step aside, Midas. This is where we strike it rich or lose our minds trying. Here, the trend line, support, and golden zone overlap. Holy triple confirmation, Batman. This is the holy grail of setups, or at least a very lucky coincidence. So it could be the best opportunity to buy. Time to click that button faster than a caffeine-fueled trader on Red Bull Friday. All right, folks, buckle up because we're diving into the wild world of futures trading. So in futures trading, we're basically time travelers jumping between the 4-hour, 1-hour, 15-minute, and 5-minute charts like a stock market ninja. The first stop on our time machine? The 4-hour chart where we try to find, wait for it, a trend. And guess what? We found a downtrend here, just like my motivation on Mondays. Next, we zoom down to the 1-hour chart to hunt for that perfect entry, like swiping right on a dating app, but for trades. Here's where it gets fancy. We look for something called a COP. Nope, not a police officer, not a cupcake. It stands for confluence of points, or something super complicated like that. A COP happens when price smashes through a big support or resistance, then politely comes back to say hello. Kinda like when your ex texts you out of nowhere. No, God! The price might not even show up at your VIP COP party. So don't freak out if it ghosts you. Just mark those important spots. Then down at the lower levels, bam, another COP. It's like a sequel to the first one, but with more drama. Now, here comes the fun part. Waiting for the price to visit that second COP so you can jump in with a short trade, like saying surprise to your opponent. Now it's time to break down candlestick patterns, or as I like to call them, the trading soap operas of the chart world. First up, we have the hammer candlestick. It's a bullish pattern, like a hammer smashing through negative vibes. Now here's the fun part. Whether it's green or red, it's still bullish. Because this candle isn't about colors, it's about attitude. But wait for the next candle to be a strong green one, or the hammer's just a hammer. Next is the coming star pattern, a classy name for a bearish pattern. Basically, the price is like, I'm out of here, and the red candle reminds us, yep, downtrend time. If a green candle gets followed by a strong red candle, that's like your ex-friend suddenly throwing shade. Downtrend ahead, moving on to the engulfing pattern, which sounds like a horror movie, but no, it's just two candles, one swallowing the other. When a green candle hugs a red candle, it's a bullish sign. And when a red candle gobbles up a green candle, bearish vibes, my friends. Now, my favorites. The famous 3 white soldiers and 3 black crows. These are basically the trading world's version of a party. One's a celebration, the other's a funeral. Both are super popular patterns, but honestly, there's a whole trading zoo of other patterns. We don't need the whole zoo today, so our price hit the COP, then formed a trailing star pattern, which, spoiler alert, means bearish confirmation. Time to jump in with a short trade. And guess what? It worked. Profit, baby. Time to celebrate. But keep your day job. Congrats, futures rockstars. Well, thank you for watching this video so far. My video today is over. Action spread is a big topic that I only talked about a part of. Practice my training so that you can become skilled in trading. Thank you for liking, commenting, and subscribing for another video. Bye.